Hello and welcome to episode 31 of Long Shots, our weekly podcast where we like to discuss things related to business, finance, and anything that we find interesting, relevant, and intriguing. First things first, if you like what you hear today, do subscribe to our channel. We are streaming on Google Podcasts, Spotify, Deezer, and many other podcast apps. So do like and share and subscribe to our channel. Do get that word of mouth rolling. That would be extremely helpful. And with that behind us, this is Nikhil Arora, and I have with me Sharad. Hey Sharad, how's it going?
Not too bad. How are you?
Very, very well indeed, very well. And typically we always start these podcasts with, I would say, 2 to 3 themes in our mind.
Yeah.
But sometimes I get overwhelmed by the news flow. It's so tempting to talk about other things besides our initial mandate.
Yeah.
And since you are the bigger gaming buff between both of us,
But in the broader scheme, I think I'm a very amateur gamer. But sure, relatively.
between both of us.
Okay.
Between both of us. So you must have read about Xbox coming up with their digitally native proposition. I think it's called Xbox One S.
Okay.
Yeah, it's I was just before stepping in the room, I saw that news flash come in.
Yeah.
And the biggest surprise was that this is a gaming console, but there are no discs. There's no slot to put a disc. Kind of makes you a bit nostalgic about the good old days when we used to, like, we are from a totally different generation. Like, you recall those gaming cassettes which you had to blow the air in before you put them in. So that was my starting base, and I think that's the base where I ended also.
Yeah. Cartridges, as they were called.
Cartridges or cassettes. So from there now, in terms of, I think formats is something which has been hit like all over the content space, right? Be it in music, be it in movies. We no longer have LPs or cassettes or DVDs. Everything is streaming.
Yeah.
So are games.
Yeah, no, I mean, I recall, like, I've never owned an Xbox or anything, but I do have a PlayStation.
Right.
And I do recall, and I don't play that many games, I play 1 or 2 games, but that too, like, played probably twice a year or something like that. But I do recall buying one game without the CD, like just buying it from the store and just I was happy that I don't need a disc. It's going to sit on the cloud server, and I was okay with it. But yes, there are people who like the whole ability to tangibly feel the whole disc and the packaging and try to keep a collection and library. But a console with no disc slot is interesting. I've never seen a gaming console like that. I know there are laptops which do not have a CD-ROM drive anymore. Yeah. So between you and me, Nikhil, we've seen floppies come and go, we've seen CDs come and go, and now we're seeing game discs come and go.
Right. I think, it's a thing, right? I mean, I think guy especially, like every guy, I think has some sort of a image of what his house will look like when he retires. Perhaps like have a library with wooden panels and books in it. Some people think of books, some people think of games. Yeah. But slowly that entire premise is breaking down.
Yeah.
So perhaps it's that material thing which that tangible object that you can look and feel.
Yeah.
That kind of gets missed. I'm pretty sure in the next like 10-15 years it will come back as a novelty item.
Yeah.
Right. Like LPs, right?
LPs, yeah.
So, but I mean, LPs are strange because LPs do have a very distinct audio quality, which you cannot get in a streaming or I would say new age format.
Yeah.
But I guess gaming doesn't really have that kind of a problem.
Yeah, I guess it's packaging and collectibles thing that probably will bring it back if anything.
Right.
But yeah, it's good. Like I think if you leave those aspects aside, it's just cost of storage is a deal for people. Like you need space to store. If you're a massive gamer, if you own like 150 plus games,
right,
you're just saving space for 150 games. You just put it on the cloud. Like that's so it obviously is rational. And by just removing that slot, you're forcing them to buy online or digitally. Right. So that's good.
But see. I mean, doesn't it affect the marginal utility or marginal cost? I mean, it's like if I have a photo album, it's a physical album, right?
Yeah.
I mean, I like it.
Yeah.
Right? I mean, it was a special moment.
Yeah.
Right, which you have captured in that physical book, and like. I mean, I don't know, in my house still, there are albums which, once in 4 or 5 years, people do go and open it and check it out.
Yeah.
But I really don't think one is going to, go back one's Facebook or Insta feed too much. I mean, I sometimes think that you do kind of miss out on, like, you do take things for granted,
Yeah.
like
Another difference being you don't need to go back to look at pictures 4 or 5 years back on a Facebook, because they themselves will tell you, oh, this happened 4
yeah,
years
so it
back.
just kind of and you hate it even more. I mean, I find it's the same thing, right? I mean, I like, for instance, like when I was in Europe, they whenever there was a picture which had to be taken, like the expression that people used to say was that, oh, let's make a picture.
Yeah.
Like that, make a picture itself sounds like such a elaborate activity that, oh, okay,
Engineering a picture.
let's make a photograph,
Yeah,
right?
yeah.
And I mean, sometimes I feel those things with all the additional utility and efficiency, and I get it, but those intangibles or tangibles get lost.
So we've seen things come and go in the last few years from a technology standpoint. Do you think we'll see an airline disappear as well from the Indian aviation market?
It disappeared right now. Today,
Yeah.
man. It happened today.
It's gone.
It's
So
gone.
100 plus aircraft. Obviously, we're talking about Jet Airways and
120.
120 odd aircrafts. And I think last week they were saying they have 7, and now they're obviously not flying the ground, whatever. It's done now, right?
Yeah, it's out of funds.
Yeah.
Most airline companies, they don't hold the aircraft on their books.
Yeah.
They lease it out. I mean, there are like dry leases or wet leases. So the lessors are kind of deregistering the planes because they want it to be now leased out to other aviation companies. I think yesterday they had 5 operating aircraft.
Yeah.
Out of that, I think only there was one jet aircraft, rest were like propeller driven, whatever. No, I mean propeller, like F5 propeller driven are equally can be equally good aircraft.
The world's biggest aircraft has propellers, so yeah.
Yes. Oh, does it?
Yeah, it's got couple.
Oh, okay. So, anyways, so I think now I think they wanted like a 400 crore emergency fund from the banks, primarily State Bank of India, which is the main creditor to Jet, and that request was turned down. So yeah, today it's officially been shut down. There's a sale process which is ongoing.
Yeah.
I think the TPG Capital, Indigo, and NIF, and at some point of time, even Naresh Goyal himself was.
Which is interesting, which we'll talk about.
Yeah. So
he's himself also part of a consortium of funds and himself, right?
Not anymore. So he on Monday, I think the news that trickled in was that one of his I think main companies, Jet Air, which is which is the GSA entity which kind of started Jet Airways, that has, I think, partnered with a Delaware-based fund or whatever, and they were also bidding back to acquire majority stake away from SBI, and legally they're allowed to do that because this process is not actually going through insolvency and bankruptcy court, so it's not going through IBC.
Yeah.
So that's why legally they are allowed to. I mean, but ethically, I find it very kind of a dubious thing that the promoters who are being blamed for the downfall of an airline, the same promoters are allowed to bid back. I mean, where did they? If they have the money to bid back, don't they have the money to pay back the creditors, so that kind of just.
I think the minimum net worth of 1,000 crores is a prerequisite to even make a bid for a strategic.
Yeah, so I mean,
which is not a big hurdle for a person who's.
Yeah, so I mean, the problem in these kind of situations is that I find it annoying because of a couple of things. One is that one is obviously like, how can a promoter be allowed to come back? But thankfully, in this case, I think TPG and Etihad kind of protested. They said that we are going to walk out if Naresh Goyal is coming back in the process.
Yeah.
So then I think Naresh Goyal kind of backed out. The second question is that, there are again these, kind of cries that, oh my God, 20,000 employees are about to lose their jobs, so the government should step in and bail these guys out. And then the government is facing a bit of pressure and they don't want to, because with the election season coming in, they don't want the so-called moral responsibility. I don't think they have moral responsibility in this
It doesn't
case.
work like that. Yeah.
If you want capitalism, this is capitalism, right?
This is the byproduct, right? You take the pluses and minuses.
And then the comparisons that, why does the government bail out Air India? It doesn't bail. Air India is a state-owned company, right? The government is a stakeholder. They're fine. I mean, as a shareholder, they have every right to bail them out, which they are doing. They don't have any vested interest in Jet Airways. Yeah. Right? I mean, I find it that way very disingenuous that, if as a society one keeps on complaining about regulatory and government overreach, but when, when quote unquote S hits the fan, I mean, at that time, suddenly we want the government to intervene. Then don't complain later that, government is kind of getting into everything.
Yeah, you got to take both, right? Capitalism and sort of free markets or deregulation comes with its own set of downsides. If it was a big bulge bracket bank which had economic repercussions, then you can make an exceptional case, but you sort of can't just keep on doing this because it's such a dangerous precedent anyway.
I mean, the thing is that whenever it's a labor intensive sector, this thing comes in everywhere, I recall in France it's pretty common, right? I mean, I don't remember the exact transaction that was, but I think it was GDF or whatever. I mean, there was some big utility company was going through a troubled time, and then the French government intervened. They bailed it out. Similarly, I think there was one. I don't remember.
How, on a scale of 1 to 10, let's say 10 being the United States, how would you rate France in terms of their sheer capitalistic mindset?
So 10 being the most capitalist?
Yeah, 10
right. I think France is somewhere at around 6.
6, right? Yeah. So that delta probably answers this question, right?
India is, I think, also at somewhere around 6.
Yeah. I think even Canada is somewhere around like maybe high single digit. Yeah. But I don't think there are 8 and 9s too many out there.
Right.
Yeah.
So, I mean, even in the US, technically with Trump, I mean, because he kind of brings some, maybe not, it's more of populism rather than anything.
Yeah.
But I mean, he has intervened since he has taken office.
Sure.
Especially, with regard to factories being set up in Mexico.
Protectionism. I mean, that's changing the dynamic.
And protectionism is against some sort of a...
True.
It can... I mean, it's not extremely direct intervention, but it's indirect intervention.
Yeah.
Right? So it's a tough kind of debate to settle.
Yeah.
But I feel that I sometimes feel that there's a lot of hypocrisy when it comes to discussions around these kind of issues. That at the end of the day, in case of Jet Airways, I mean, they were over leveraged.
Yeah.
Right.
Massively.
Anyone who can see a balance sheet knows it.
And they're making losses.
They were making losses.
It doesn't do anything.
They made acquisitions which did not work. They acquired Air Sahara. Right?
Yeah, that was for like 1,500 crore or something.
Yeah, it did not work. It got written off.
Yeah.
They were suffering high competition from Indigo, from Go Air, from SpiceJet. They didn't take low-cost carriers very seriously. They thought that their executive carrier base is good enough. Crude oil prices were going up, and there was poor management. So at the end of the day, even in this case, it was strategy which had gone wrong.
Yeah.
So
the promoter has to take responsibility.
Promoter should take responsibility. And employees are, that's a risk that you take if you're working in a private sector enterprise,
Yeah.
Can't really do much about it.
Yeah, and I was reading somewhere, I don't know what the exact time frame was, but very recently they were sort of getting 21 crores daily losses.
Right.
Coupled with a debt of over 1,500 crore.
Right.
Like that's a deadly cocktail, right? For any company, irrespective of how big you are, your debt is just there's nothing offsetting that debt number. Correct. You're not making any money.
Correct.
And it's just such a dangerous position and so many poor decisions. Obviously, it's easy for us to say in hindsight, but you still got to take ownership of it, right? Yeah. So I completely...
you get that entire piece. If you're a private setup, obviously you have much more freedom and flexibility around your strategy.
Yeah.
But you face the consequences, right? Similarly, if you're a PSU, probably, in terms of budgetary allocation or in terms of commercial consideration, you're not under a lot of pressure. But then you're a PSU, so you have other obligations. I'll give you, like, for instance, in aviation, this is a very common issue that if you look at Air India, they have been for a long duration of time been compelled to fly on non-profitable routes because they're a national carrier. Yeah. So you have to provide connectivity. So they have flights in the Northeast, right? Before anyone else had flights in the Northeast, right? When there was an earthquake in Bhuj, I think they operated 400 flights.
Yeah.
To get relief measures. Jet Airways did not do that.
Yeah.
Indigo did not do that, right? Indigo is not even there.
Yeah.
But they did not do that. So at the end of the day, kind of pitting this against look at a PSU, it's protected. And me as a private sector enterprise is not protected. It's a hollow argument, because only when the chips are down for you, then you are kind of bringing those points out.
Yeah.
When things were going well, you would not. So I think that way is it's let's see how it kind of goes. Obviously, I'm pretty sure. I mean, the sale process is going to go through. It's going to kind of come out of it. But there's obviously collateral damage in between, because I think people have not been payroll has stopped since December for many classes within the organization. So yeah.
So if Naresh Goyal and Vijay Mallya combine together to create a new airlines and raise capital, call it Air Awesomeness, would you buy a share? Would you be a shareholder?
Air Awesomeness will be flying 737 MAX 8s.
Oh yeah, add that too.
Yeah. I don't know.
Anyway, no, Indian aviation, aviation as such is interesting. Like we said, labor intensive and capital intensive, despite being off balance sheet.
Very high price competition, right?
Yeah,
I mean, it's a volume driven business.
Volume driven business, and it's always interesting and fascinating. And there is something about aviation which appeals to a lot of people, and it's just big and easy. Like people can understand the product very well.
I think the problem is that in aviation, at the end of the day, I mean, it's a very customer service oriented business. So I often feel that, it's almost like going to a restaurant for having a meal.
Yeah.
But even if one thing goes wrong, then the entire experience goes bad, right?
Yeah.
Similarly, in aviation, I mean, the experience starts when you're at home, when you're taking the cab to go to the airport.
Yeah, web check-in.
Web check-in has to be good. If you have a kind of a rude person at the counter when you are checking in, that can ruin your experience. If the security person is not, up to the mark, that can ruin, even though the security person has nothing to do with the flight.
Yeah.
Right. If there's a delay due to some external factor, that's a factor as well. So yeah, I mean, it's a very, very difficult business to crack in the first place.
Yeah.
So I don't know why Mr. Mallya decided to do that. It's not selling beer. So I mean, it's not selling beer, right? I mean, there you have a plant, you sell it. That's it.
Yeah. Yeah, you sell it.
You don't have to convince anyone that you should drink beer.
Absolutely not.
So
worth obviously keep track of it, and will make most business schools case studies sometime in the future. But nonetheless, interesting. And let's move on to another sort of startup, let's call it, in the fintech space, and a space that you're really fond of.
Yeah.
And a space that you understand well. And we've obviously talked about this company called Cred. We've touched upon it way back, and sort of how they operate and what is
I was very intrigued because I remember, I think it was 2 or 3 months back when they went live, that there was a front page, full page ad you get on, Times of India and HT.
You mean the advertising company Times of India?
Yes, exactly. Wow,
Who also do news.
Well done.
Who also do news.
Well done. Wow, nice jibe on the side. So, so Cred, I think it's Kunal Shah promoted company. Kunal Shah, as we all know, the founder of Freecharge.
Yeah.
He got a nice exit out of it. And so Cred, they kind of published this front page ad on the major papers one fine day. And I was very intrigued by it because it was like a nice, it was a lot of wastage of black ink. Like it was a full page of black. With a bit of, so I was curious what exactly it is. And then I actually downloaded the app. And it was a very, very nice looking, rich UI mobile app. And what they do is that it's a credit card rewards app. So what they do is that they insist that you link all your credit cards, just credit cards, not debit cards.
Yeah.
So you link your credit cards to the app platform, and you pay your bills through it, and you make your purchases also through it. You book restaurants or whatever, or like try to process most of your transactions via the Cred app. And in return, they unlock rewards for you, be it deal codes from Zomato or Swiggy or Uber. And they were like a couple of providers, which I think they had tied up with.
Yeah.
And I kind of felt that I think the idea was interesting because it's a good way to get data.
That's the only long-term economic rationale that I see from such a thing, especially in a market like India, which is so debit card heavy.
Yeah.
Credit card is under-penetrated. I don't even know whether the word is under-penetrated or it just will never.
I think in terms of transaction volumes, credit cards are sizable. In terms of in terms of value, they are sizable. But in terms of volumes, it's hardly anything.
Yeah, I think there are 46 million credit cards reported, and there are 944 million debit cards.
So it's definitely skewed towards debit cards. So in terms of, I get the data argument because I think most credit card users in India are going to be guys with high credit scores, basically. So it's a good way to kind of acquire them and have that creamy premium layer on your platform. I'm pretty sure at some point of time they are going to enter lending themselves.
Yeah.
They'll have to do it. Because they can't just stay on as an intermediary. I think most of the products from whom they are pushing rewards, those companies have their own apps. Those apps have. I think we're beyond the time where better experience on an app is good enough.
Yeah.
Most, I would say, well-funded setups have good experiences already laid out. So the temptation can be that at some point in time they are going to start lending, and they are just getting
And insurance as well, maybe.
lending, insurance, but actually underwriting products rather than just act as an intermediary. So that probably might be the angle that they are pushing for. They're getting a lot of traction from the investor community, right?
So what's the valuation now? Expected valuation at?
So they raised some amount last year, which was valuing them at 75 million.
Okay.
Now they're currently raising 100 million. They're in talks with China's, Hill House Capital and other investors, which will value them at 400 million. So
That's
within
steep upswing.
Yeah, within 6 to 7 months, from 75 to 400. So that's a 5 times plus increment, which I think is a bit kind of too hot.
Lofty. And Hill House is sort of invested in other Indian now unicorns maybe, but like Swiggy and guys like that as well, I think.
I'm not sure if they have they maybe.
Yeah, I think Auto Portal, Car Dekho, Swiggy. I think Hill House does have what's it called, exposure to the Indian market.
Right.
So now they're trying this, but
So they're obviously attracting that attention.
Yeah.
But I think that there are a couple of issues, right? Number one, the entire data and lending piece, that's a medium to long term play.
Yeah.
It's not a short term play.
Sure.
In the short term, payment space is so crowded. With UPI, credit cards already, as you said earlier, is not the biggest kid on the block, right? And with the unified payments interface becoming a de facto backbone for most payment providers, it has already exceeded both debit and credit cards as the preferred channel for payments.
Yeah, and just to give some numbers on that context, like we talked about how their valuation saw a steep upswing to 400 million now. UPI platform was processing 27,000 crores in April 2018.
Right.
Now in March 2019, they're doing 1.35 lakh crores. Imagine that.
So that's how many months?
Year.
Oh, 1 year, right. Right. Oh, wow. Yeah. So
So like you're saying, that's a big...
So I think it's already higher than debit and credit cards.
I think
right?
so, yeah.
So, it's a completely interoperable platform, right? I won't blame anyone not to use it. It's seamless. WhatsApp is using it, right?
Yeah.
Peer-to-peer payments. Paytm is dependent on it now. So, I don't know how much traction will Cred continue to have. Only focusing on, I think currently they have a cap of 750 CIBIL score in order to actually become a member of, they're calling it a members only app. So you need to have a CIBIL score of higher than 750 to be, to become a user. Mm-hmm. I'm pretty sure they're gonna reduce that.
And it ties with any credit card available? Like, is that...
I tied my American Express with it, yeah.
American Express for sure. If they have a premium positioning, American Express sits on top of that tree, right? I'm guessing like their credit requirement.
But to be fair, I did it just for seeing how the app works. But I was very apprehensive of why should I link my credit card to a third-party app. That was a main concern for me.
Yeah.
American Express has a nice app already.
Yeah, and you don't have any troubles paying your credit card bills through them.
Yeah,
right?
American Express is a beautiful app.
Yeah.
It has a nice loyalty program, right?
Yeah.
The points are good. I use them fairly regularly. Why would I go to, it's an aggregator of rewards, right? It's like, for me,
loyalty company.
It's like Groupon.
Yeah.
It's like Groupon, but for a very creme de la creme user base. And the creme de la creme user case, I don't know how tempted they get by a deal code from Zomato or whatever. I don't know.
Yeah.
So I like the long-term, medium-term premise.
Yeah.
But that's assuming a lot of other things happen. I sometimes sense that, a lot of this spike in valuations happen because there is some sort of because of the founder. The founder has already had a successful exit. So there's a certain bit of aura around that person, so that attracts a lot of investment. From a fundamental perspective, I frankly did not kind of buy it.
Yeah.
But yeah.
But yeah, it'll be interesting to see. I like fintech is such a the word itself, right? Like I think everyone who's doing a little bit of anything remotely related to cards or payments or anything and has an app, it becomes fintech.
Right.
So this is for me is a loyalty program. That's about it. It sits on a tech ecosystem, but even online train booking sits on a online booking system, right? So I don't know, but yeah, it'll be interesting. It's a space that you follow closely. Let's see if and when they get into insurance.
Yeah, let's see. I mean, if they raise 100 million, I'm sure they'll do that very quickly.
Yeah.
So that is with that. I think kind of behind us, we can now switch gears to look at another company which has no issues when it comes to traction.
Yeah.
Right. They probably are broadcasting their two biggest media properties of the day, IPL and Game of Thrones.
Yeah, in current theme, you're absolutely right. Both ongoing simultaneously. And both of them can be caught on our favorite company. Well, not favorite company, but a company that at least I think we have positive views on, Hotstar.
Yeah. So what's been going on? I was reading somewhere that they crossed 300 million monthly active users.
Yeah, they did cross 300 million monthly active users, and they reported that I think a day before, or was it a day after? Well, in line with when the episode 1 of, I don't know if it's season 8, season 8 of Game of Thrones was being aired. So basically last Monday for us, Sunday for US.
Right.
But they reported that, and it's funny because Wall Street Journal that day was reporting the next day that 17.4 million viewers watched Game of Thrones opener, and that was obviously a big number. But for me, like the Hotstar crossing 300 million monthly active users is like a more profound number.
Right.
Like these guys were 75 million 2 years back, not too far back.
Right.
So it's today we've talked about all these companies with massive growth and Cred valuation growth and UPI payment traction growth, and Hotstar is equally impressive, if not more, in terms of growing it. And IPL is the other beast, right? So they've sort of captured sports rights and live sports. IPL in the first 3 weeks, 267 million viewers were online, and this compares to 202 million for the entire IPL season last year.
Right.
So they're tracking well ahead, right? And they broke a record.
Kind of shows that streaming works beautifully.
Yeah, live sports. And live sports, no one else has cracked it like Hotstar has. I think it might be a model that I think the rest of the world can sort of look at, because live sports has been a nut difficult to crack. I remember 5-6 years in Netflix's earnings calls, analysts used to earlier probe about live sports or live news. Are you going to get exposure to that? And they were sort of very clear that we're not going to go there. It's a tough nut to crack and things like that. But
why would you say it's a tough nut to crack?
That's what I remember them saying, that it comes with added complications of, first of all, rights are very expensive.
Right.
And so it was something that they wanted to stay away from and focus rather on scripted content. And stay away from unscripted as a business mandate. They probably think of shelf life of such content as a factor. I mean, live sports just loses its shelf value immediately after streaming, right? It's not sort of after game is done, that content probably no one comes and watches it again, or maybe just catch highlights or something.
Right.
But with drama and other kind of scripted
it's
content,
phenomenally high margin, right?
It is phenomenally high margin, and for that time period,
right,
I think you can get a lot of advertising dollars because of supply demand kind of mechanics. But
right,
Netflix has always been subscriber driven, no ad supported, right? So I guess I'm just thinking out loud. I mean, you tell me. But those
if you want to be a subscriber only platform, then probably live sports does not make sense.
Maybe it does not make sense. It rather makes sense to invest in shows which are more time neutral.
Right.
So but I personally am a big fan of Hotstar, so it's definitely. But Amazon Prime has now sort of started, at least in the US, looking at live sports, and they've got NFL rights for a few games, and it'll be interesting in how people view the next IPL rights in India.
Right.
Right now Hotstar has it, but I won't be surprised if guys
So they are due till
2022 or 2021. I'm not entirely sure, but yeah, they have rights for it. And
I think even this time there were some surprising bids which came in, right?
I think Facebook was in there. A couple of guys were there. So these big people who have scale, right? They can get into these rights and start distributing it. I wouldn't be surprised if Google via YouTube or someone comes in as well. Streaming is becoming so ubiquitous now.
I mean, it's funny, right? Because freemium model which Hotstar is following, right? I mean, it's at the same time it's a more diversified revenue model, but it's also more risky revenue model.
It is. I agree. Yeah.
I mean, that way it's very interesting because say the rights are not renewed next time from the IPL, right?
Yeah.
Such a big blob of revenue just falls flat.
Exactly.
Overnight.
Yeah, no, absolutely right. I think that makes them riskier.
Yeah.
And either they supplement it with other something or just invest in original content. That's why you're seeing so much investment in original content. Because at the end of the day, distributors are as good as their content.
But Hotstar also introduced a subscription-only product, right?
They do have subscription.
What was it, Hotstar VIP or something?
Yeah, they have Hotstar VIP.
That had another one page, the big Times of India page.
Yeah, they are not short of money. They have a lot of money, and I mean,
That's how you announce in India that you have arrived. You put up.
Yeah.
You put up, page one ad.
Yeah, and Disney owns them, right? And Hotstar's done well in terms of getting these exclusive HBO rights.
Yeah.
So like Game of Thrones being one of them, but all these HBO shows are distributed via Hotstar in India over the top. Obviously, HBO as a channel is also available, but over the top it's via Hotstar, and Hotstar is really leveraged on distributing top quality content via be it sports or HBO content. But now HBO, with all these everyone going direct, I don't know what the repercussions will be. But yes, you are right. I think the key takeaway is that as good as they are, it is also risky.
Right.
Because once that content goes away,
because HBO is also, it's very natural for HBO to get into direct streaming, right?
Yeah, Disney is coming with Disney Plus, right? Yeah.
So that's supposed to have HBO content?
I think so, yeah.
Oh, okay, that's surprising because I would have thought maybe HBO would go for a standalone OTT.
Yeah, I don't know. Yeah, I don't know. Actually, I'm not too sure. But
Right.
at least in India, like Hotstar has the right, so I don't know what happens. And I don't even know if Disney Plus is planning to launch in India. Who knows? But yeah, like it's a convoluted ecosystem.
Because I think, if you look at original content, the closest comp to Netflix in terms of the way you drill out high quality original content would be HBO, right?
Correct. Yeah. In terms of studios, in terms of the
they have great shows, they have and they have great success.
Yeah.
In kind of churning them out at regular intervals.
Yeah.
So I won't be surprised if they also decide to go like a lone wolf in this domain.
Yeah.
Maybe they already are. So with that, I think that's very interesting. And unfortunately, we don't have a lot of time left, Sharat. But I was planning to talk also about Reliance Retail acquiring Hamleys, the toy store.
Yeah. Is it already announced, or is it rumored speculation that they want to get into that?
No, I think there's some process going on.
Okay, process going on, right? Yeah, I read about it. Yeah.
I don't think that
I also want to talk about Saudi Aramco trying to get a piece of Reliance in terms of the oil business.
So the single biggest unicorn of our country is dabbling as usual in different things.
Interesting, no?
And that's Saudi Aramco was what 25% of the refining business.
Yeah. That's also pretty interesting. But no, we have obviously, like you said, you started off earlier the session today by saying that there's just so much of stuff happened, and we haven't even talked about election polling happening, but we'll park that for now. And no, it was
that's also an editorial decision.
That's true.
If you recall, because
we don't do politics.
We have a tendency to shooting from the hip when we are talking about political issues. Yeah. So better leave that to more private conversations.
That is true.
Or Twitter on the rainy day.
Yeah.
So, but yeah, I think obviously today is phase 2 of elections has been announced. So yeah, like all good citizens, if you have a vote, please make it count.
Yeah.
And with that behind us, I think it's time to sign off. And before we do that, sorry, standard point. Before we do that, do feel free to share your feedback or comments on the podcast so that we can make it better. We have one more episode to go before we close season 2. So looking forward to it next week, and have a good one. This is Nikhil Arora.
And this is Sharat Tupran.
Signing off.